There's 85 million IRAs in the United States. There's 85 million lenders that could lend you a portion of their IRA to fund your business to get you going. So you can buy a watch company, you can buy cattle, you can buy real estate. And so it just takes one deal.
All right, today's podcast, I've got a guy who's lent over $1 billion towards real estate investments. He's flipped over 12, 15 hotels. He's doing things that people haven't done. He's got an IRA company that is really cool, helps people invest directly into real estate, get their money out of the stock market and 401ks and all that stuff. I've got none other than Greg Herlean. What's up, man?
Hi, thanks for having me.
Yeah, it's kind of funny how we met because we're both in YPO here in Vegas, but we didn't know that at the time. We were just speaking at whose event was it?
Kent Clother's event.
Yeah, we were speaking at Kent's event. I think it was in San Diego.
Yeah.
And you were like, yeah, I'm going to Key West or something.
That's right. Tomorrow I'm going to Key West.
I'm going to Key West tomorrow. I was like, I'm going to Key West tomorrow.
And no one goes to Key West from San Diego.
Yeah. And I was like, what are you going for? And you're like, I'm going on this YPO retreat. And I'm like, I'm going on that trip too. And then because we were not even in Vegas either. We were both in Cali.
Yeah.
And you're like, yeah, no, I live in Vegas. Like we're going to the same thing.
Yeah. That's a small world.
Super random. And then, I ended up not even being able to go because my flight got canceled. It's so dumb.
Yeah, I was like, where's Ryan? They're like, he canceled yesterday. I'm like, I was with him yesterday. He said he was coming.
Yeah, yes. Well, and even then, flights weren't getting canceled like they are today.
Yeah.
Flights are crazy right now.
Yeah, it is crazy, yes.
Yeah. So what even got you into YPO, dude? Like what you're doing all these different things.
YPO was good for me, especially at the time. I started 8 years ago. And someone just like, hey, I think you qualify for YPO. Do you know what it is? I said, no. And he's like, you should take a look at it. And knowing what I know now, it's totally different from what I knew then. But I thought YPO was like a big like networking and like business thing, which is kind of, I was not too interested in. But I've learned it's like just like-minded individuals who have created success or wealth or inherited it, and they're talking about stuff that you're dealing with, staff, people stealing from you, business, partnerships, how to sell your company, and how to raise children with money, big things that a lot of my friends at the time couldn't talk about.
Yeah.
So that's why I joined it. It was good. It was really good.
Yeah. For those who don't know, it's like a super high net worth business kind of, I don't even remember the qualifications, but I think you had to be doing like over 10 or 20 million in revenue and have like 20 plus employees or something.
Yeah, there's a qualification process and interview process. It's
and they got to like you.
Yeah, they do have to like you. You don't want to piss them off.
Yeah. But so tell me about like your businesses, because you were in the real estate game for a while and I think you still are doing a bunch of things, but how did you get started?
So when I was in my early 20s, I met an individual actually here in Las Vegas who had this, I remember pulling up to his house, and it was like a Wednesday at 2:00 in the afternoon, which I'd never seen my dad on a Wednesday at 2:00 in the afternoon, and never in front of a house that looked like this with a boat, and he was washing the boat, right? And so for me, not growing up like that, Dad was in the Air Force, I was like, whatever he's doing, I got to figure it out. And fortunately, it wasn't drugs or anything like that. And so I learned that it was real estate. Real estate had kind of created who he was. And so I immediately just fell in love with real estate because I wanted that lifestyle.
Right.
Just being honest, that's what I wanted. And so I had no money, had no credit, had no family with money. And I learned very, very quickly through him and others how to find money and where money was at. So actually, I'm trying to give you the Cliff Notes version of this, but I learned about IRAs, believe it or not. At the age of 23, I learned that individuals have IRAs, retirement accounts, that they could use to fund my deals.
Right.
And I had no money. So I was like, this is perfect. And so I started talking to people about using their IRAs to fund my deals. And that's how I did my first flip. I did my first flip here in Las Vegas, $60,000 flip. Someone lent me 100% of their money from their IRA and partnered with me on it. Flipped it. I made 25%. I gave him 75%.
Wow.
And
you were generous.
Well, at the time, actually, knowing what I know now, I'd give him 100% because what I did is I proved my concept, number one. But number two, I created a lifelong investor.
Right.
And so obviously the next deals changed. It was 50-50, then it was 75-25, then it became 8% fixed after 10 years of working with him. And so, but what I learned is I learned the power of using an IRA because it helped fund my business. And so, fast forward, I did, not tons, but I did a little over 500 homes over a period of time. But what I got really good at is lending money. I would either find money from individuals or be part of funds, and I would find money to lend, and I got really good at lending. And so that's how I started lending a lot more money and showing people how to use their IRAs to lend money. And that by default, 10 years ago, halfway through my career, because all I talked about was money and how to avoid paying taxes on your gains. Am I boring you with this IRS talk? Okay, all right.
No.
So I learned that you can move your IRA in invest in real estate. So I created an IRA company. I think similar to you, I found that all the companies I was working with sucked.
Yep.
Their service sucked. The process was terrible. And I was like, I'm just going to fix it. I'm going to create it myself.
Mm-hmm.
And knowing what I've learned about you in a little bit of time, I feel like you can totally appreciate that. So I created a trust company just because most trust companies sucked to help serve my business. What ended up happening now is my main business, 90% of what I do is the IRA business. I teach people how to use their IRA money, how to avoid paying taxes on businesses and different real estate. And it's become kind of a fun subject because it's pretty damn boring in general. If you start talking about, that's why I was making fun a little bit.
Yeah.
When we talk about IRS and taxes, very quickly, especially if you're in your 20s or 30s, people just kind of turn off, which is not the right thing to do because it's really changed my life. So anyways, the long answer to your question about what I do now is I truly focus on helping people with IRAs, but still I'd say 10% of my time I'm still in the real estate game. I'm doing commercial projects here in town. I do land developments. Now it's all with my own money. I don't really partner with others. I just run my trust company, and then I'm just a real estate junkie still. I like doing 2 to 3 or 4 projects a year that are decent size. And I find it's a sport a little bit too. Real estate's fun.
Yeah, real estate's great. And also too, speaking of boring things, I own a CPA firm, and so trust me, my partner bores me to death. And he's been on the show many times, and people love it. People love the boring stuff. Yeah, if you're listening to this and you're watching on YouTube, comment below if you like the boring stuff, because I'm surprised. I'll be asking them all these questions just that. I guess I'm trying to make intriguing because I know the answers to, we've talked so many times, but I'm like, all right, so tell people why is the S Corp so different than whatever, right? And people love it.
Yeah, they get into it, man.
They love it. We had him speak at, our last event. He speaks, almost at every event, and people just are like, dude, we just love it. People just, for whatever reason, love the idea of saving money, honestly, more than making money.
Yeah.
To me. Because I'm always been so hyper focused on how do I make more? How do I make more? I'll worry about the consequences down the road.
Yeah, in October.
Yeah, I'll worry about them in October or just freaking get a payment plan. I don't care.
Yeah.
And, but people, I think the way America and most people are engineered is kind of like the other side with Dave Ramsey. Hey, how do I cut expenses, save some money here, make a little bit there? And they like counting, the savings.
Yep.
And look, I think, there's 2 ways to wealth. I mean, there's the way that you just go out there and make a boatload of money and you do it fast, or you save your way to wealth. But either way works. Yep,
it totally was. And I would say what gets me excited about it, and it's it's obviously a numbers game, is you start talking about like you and I, let's say we are buying a business or this building together. I can do it inside my Roth, for example. My $100,000 or $1 million, and your $1 million can do it just through your LLC or you individually. And then when we go to sell it, the difference is when I get my $1 million plus profits back, I pay 0 in taxes.
Yeah.
And so if I keep doing that, that's just obviously an example, but if I keep doing that year after year, and we use the same exact dollar amount, I would have 50 to 60% more money just by using a rule that the IRS allows us to use.
Right.
And I think most people just get caught up in that because they're like, oh, it just seems complicated. And it's just really not.
No, it's not. I remember reading a story that Peter Thiel has a $1 billion Roth IRA or something. What's the story?
It's great, man. Peter Thiel, he's got, I think it's over $5 billion. So you got to appreciate this because by the way, what we're talking about when I talk about self-directed IRAs, this is something that's been around since the 70s. This is not I think it's a little bit newer now because younger people are getting more engaged in investing outside the market. But this has been around for 50 years.
I have a self-directed IRA, by the way.
Yeah, that's right. We talked about that.
Yep.
Yeah. So this is not something new, and so it's new to most people. And we can talk about that later. But what Peter Thiel did is he was one of the original partners in PayPal.
Yep.
And so his interest that he put in when he invested was through his Roth IRA. And so a Roth is after-tax dollars, right? So he already paid the tax on the $5,000. His interest was owned by his Roth instead of him or his LLC. And so when he sold PayPal, his $5,000 was, I think it was I don't know what it was, but I don't think it was quite $1 billion, but it was a few $100 million.
Yeah.
So the few $100 million gets paid out to his Roth, and he pays nothing in taxes ever, by the way, not now and not later because it's a Roth. And then he takes that money and he I forgot what the next big thing was, but PayPal-ish kind of stuff, right?
Yeah.
And you can read about it. It's all over Google. Well, anyways, it's gotten so big, and the government will never make anything on it. And so last fall, about 14 months ago, the government came up with a new law
To try and get them.
Yes, and externally they call it the Peter Thiel law, but it's not called that in Congress. You now, I believe the rule is, can not make more than $10 million a year in your retirement account, and which, by the way, is totally acceptable. I mean, that doesn't happen hardly ever.
Yeah.
So it's still an okay rule. And then if you make more than $2 million in your IRA, you get audited, which I'm okay with as well. I mean, you got to pay to play, and that's fine. It's not like you're doing anything wrong. And so
You're just making money.
you're just making money. And so, yes,
good investments.
this guy was a genius. And by the way, many people can do that. Like when you start a new business, or if you are going to invest in a new business passively, your Roth IRA, if you don't need the income, right? If you need the income to pay your bills, you wouldn't put your Roth IRA in there.
Right.
But Ryan, I'm sure, I know you've got lots of different entities, and you're probably already doing this with your self-directed, but you can pick and choose which entities where they're passive, that you can have your Roth own it and not pay the taxes. And so more people should be doing this. I know, like you do. So.
Yeah, and we'll get into the function of how IRAs work so people can fully understand from start to finish. But I guess the thing with Peters is, okay, so he's got this $5 billion valuation on his Roth. I mean, it's some is cash, some is in businesses and stocks and maybe real estate and whatever he's got. I don't know. How does he ever tap into it to use it? When does that become available to him? Not as just only for investments, but to him to spend.
So for him to spend on whatever he wants, like let's say vacation or personal things, it's 59.5.
He's got to turn 59.5, and then how much does he get access to?
100%.
He can just go spend all of it.
All of it. And so now he's going to have probably the bigger, well, I shouldn't say with the Roth, it doesn't matter, but at a certain age, the IRS now has moved, and this is where people get boring with some of maybe the rules, but just recently, I think a couple weeks ago, changed the rules where you have to start taking out money out of your retirement account. And I think that's now at 72 years old. So you can't just leave it there forever.
Right.
You got to start taking it out by 72. But to answer your question, 59.5, he can take it out and there's no penalties.
Got it. Why a half?
I have no idea.
That's so weird.
It's so typical of them.
By 180 something days after your birthday, you can do it.
Yeah, there's probably some life expectancy thing to that. I think that's the other thing that I think has changed is people now. I don't know if you've read.
They're reading longer, or they're living
longer, and so I think that also has a play into why the IRS has moved back when you have to take your money out. They're saying, okay, now you can wait till 72, so you don't outlast your money.
I was reading. They're talking about how there's going to be 3D printing of organs and all these things, and there's a good chance that people routinely live till 150, 200 years old.
Really?
That's what I was reading the other day.
Man, well, if that happens, we're screwed. Not we, but in general, America's screwed because they don't have enough money for that.
Well,
they're gonna have to work till they're 120.
Well, and there's not enough housing to support that many people. There's not enough anything.
You're gonna have to go to South Dakota, man, North Dakota.
There will be a lot of Midwest people. I played 4 years of baseball in Fargo, North Dakota.
Really? All right.
So I know
So
who's out
land.
there.
It's just cold.
Yeah. But okay, so let's talk about IRAs and in general, right? Okay, so what does IRA even stand for?
It's an individual retirement account.
Okay, individual retirement account. What makes it different than a normal 401k or these other things?
Well, every type of retirement account is a little bit different. The general rules all apply regardless. So I also want to preface when I answer this question as a self-directed, which I think we'll get to shortly. Whatever we're talking about, you can do in a self-directed manner. Meaning, if you want to have an IRA, traditional, it allows you to put so much amount of money in there. And the difference between a traditional and a Roth is it's pre-tax or tax dollars. Meaning, a traditional means if you made $100,000 and you contributed $6,000 into your traditional, you'd only pay taxes that year on $94,000 of your income.
Right.
That means, though, it's already been taxed, or it's not been taxed. It grows tax-free, but comes out, you pay taxes.
Yep.
A Roth, if you made $100,000 and you contribute $6,000, a Roth, you've already paid the taxes. So that means when it grows and comes out, you pay nothing.
Right.
The limitations and what you can do are about the same. There's simples and SEPs, but you said 401ks. 401ks are kind of sexy because there's a lot of different things with 401ks and simples and SEPs where you can contribute more than the $6,000 or $7,000. Many people that are listening to this are like, cool, this sounds great, but it's only $6,000 I can put in.
Right.
If you're wanting to put away and contribute more money, the IRS has created different types of retirement accounts to allow you to put more money in. For example, I have an individual self-directed 401k. And now this year, I'm able to contribute between me, the employer, and me, the employee, up to $52,000 this year.
Mm-hmm.
You could never do that in a traditional or a Roth, if that makes sense.
Yeah.
So there's just different rules, like again with the simpler SEP, and that's a percentage based upon how much money you make. And so, but the rules mostly are for the most part the same. The different types of accounts really just change how much you can contribute.
Right. Yeah. I had a SEP IRA.
Mm-hmm.
And I remember the reason I got it was because I wasn't looking for after tax dollars when I retired. I was looking for tax help today. Yep. And I think at the time I was able to contribute like 54 or something a year.
Yep.
And so I did that for a few years. And then after that, I was just like, I don't even want to do this. Like, I'll just buy more real estate and depreciate.
Uh-huh.
That was kind of my plan.
Yep.
So that's where I ended up. But I never really fully understood the difference between the Roth and the SEP. But what you're saying is the Roth is simply after tax dollars?
Yeah, Roth is after tax dollars. It's powerful, especially, I mean, again, the Peter Thiel concept.
Right.
Is, I mean, let's say that, someone comes to you and wants to start a marketing company. And in that marketing new company, they just want you to be part of it, and you're going to be an investor, and you put up $10,000 for 25%.
Right.
Well, if you do it in your Roth, it's even better than a depreciating asset. So it really depends upon what kind of assets you want to buy and how much money you have to contribute. So that's why we always talk about when we talk to our clients. Everyone's a little bit different. A Roth isn't for everybody. If
Right.
you're having a tax problem today, a SEP or a 401k might be the right answer.
Which one of those, though, allows you to like put a bunch of money in it?
Well, there's the two that allow you to do the most are typically a 401k or a defined benefit plan.
Okay.
Those two, you're able to put a lot of money into. Now, when I say a lot, the defined benefit plan, there's a whole calculation. There's a third-party company we work with that helps you figure out how much you can put up. But it's considerable. You can put up hundreds of thousands of dollars.
Okay.
I would say that our most common that we see with most of our accounts at Horizon Trust is we see people do 401ks. They have an LLC. They're typically a sole owner of their LLC. We create a retirement plan for their LLC, a 401k, and inside of that 401k, we create a Roth account. So it allows you to contribute like up to $50,000 or $52,000 into a Roth account for your 401k. It's creative, and that's what I'd say most of our business owners are doing.
Okay.
And so then what they're doing with that money is they're looking for more passive investments. Like when you're doing, these, I know, Ryan, you've got a wide variety of, at least that's what I've learned, of different asset classes that you're in.
Yeah.
You get to pick and choose. But if there's ways where you might just want to lend, and,
right.
you get a piece of the deal, like that guy who lent me the $60,000 for 75% of the deal.
Yeah.
That's the perfect example for you to either invest in a business or lend to somebody on terms on a percentage rate. And so that's that's where I see most people using this 401k. The message I like to share and get out there is whatever you're currently doing. Like let's talk about wholesaling. Wholesaling is kind of an easy one, right? So let's just say that every year you just put 2 wholesale deals in your Roth IRA. So you put it, you do 2 deals. Let's say that you put up 5,000 and you flip it for 15 or 20. Is that a fair number? You tell me.
I mean, do you got to actually buy the property? Because wholesaling,
you don't buy it. I'm not saying you're buying it. I'm just saying you put the money.
The earnest money.
The earnest money.
Okay.
I mean, I know you can do it for 1,000, but let's just say what's the average?
They'll let you do that with wholesaling.
Mm-hmm.
So my earnest money is the investment.
Mm-hmm.
That I didn't know.
Yeah.
Because I was always told, so with my SEP IRA, they always said, hey, for you to self-direct it, and we didn't even talk about self-direct, so we got to cover that too.
Uh-huh.
But they were like, you could self-direct it into a property that you have to buy. And so that first year, I remember I put like 50-something thousand. I'm like, I can't buy anything, right? Like not here in Vegas. And so the next year I put in another 50-something, and then I was like, okay, I got over 100. I can buy a mobile home now.
Can do something.
Yeah, and so I bought a mobile home. I flipped it, and it became like 130. Then I did it again and became 150. And then it's funny because then during COVID happened, and I took it all out of the real estate, and I bought stocks because I had never been a stock guy. But I was like, dude, these stocks are so undervalued. This is stupid.
It was crazy.
Yeah, I'm like, I don't even know stocks, but Tesla shouldn't be worth this.
Yeah.
So I put like 50 grand in Tesla. I put like a bunch in all these other stocks, and then my money doubled in like 3 months. I was like,
did you pull it out?
Yeah.
Okay.
I was like, I'm a genius stock trader. Like I'm the best. And so then it became like 300,000.
Yeah.
And then, I mean, I just kept like doubling it up just with the different ways of investing. And then I ended up putting it into one of my fund deals because I was like, all right, I don't really care to flip with it. Like I'm going to go put it in one of my own syndications.
Yep.
And that's where it currently is today. But I guess my point with that was, to me, the rule was with the SEP, you had to actually own 100% of the property. You could not have leverage or anything.
Well, there's 2 points here to talk about. First, your retirement account can leverage. It's got to be non-recourse leverage. So we have lots of providers that are looking to lend to our account holders.
Okay.
So if a guy wants to buy a home for $100,000 and only has 50, we've got several funders that will do a non-recourse loan. It has to be non-recourse. An IRA cannot guarantee the loan that it borrows. Make sense? So
they never told me that.
Yeah.
Okay.
So we have that, and then the second thing is the example I was giving on wholesaling. You don't have to, like we've got guys that do lots of them that wholesale 1 or 2 deals a year. They'll put down earnest money contract. The contract's between their IRA and then the buyer, right? And they'll put down $5,000, let's say. They flip it, right? 30 days, 60, whatever
Wholesale
it is.
Yep.
Wholesale it. And so now that money goes back from title to the IRA, to the Roth. And so that 5 is $25,000. So now you do that. And that's, again, that's my big message for people is if you're good at real estate or whatever it is, business you're in, that's awesome. Keep doing it. And income's awesome. Live your life, but you should be putting some portion of your money in something where you're not paying taxes at all. Because all of a sudden you're going to look back at this like you are with your with your $50,000, or you put in 100, let's say. You put in $100,000, and I don't know what it is now, but it's more than 300, you just told me.
Yeah.
And so, and that happened, it sounds like pretty damn quick.
Yeah,
that wasn't
fast.
like, so, and it's not like and you didn't pay taxes on any of those gains. And so if everyone can just do a little bit of that, and so then all of a sudden you look back after 5 or 10 years and your $5,000 or $10,000 is 100 or 200, believe it or not, that's for a lot of people, that's a big deal, because when you do turn 60, and let's say you have $1 million or $500,000 in there that you didn't pay tax on, and now you put it in a fund and it earns 8 or 9% or 10, right? Let's be conservative.
Yep.
You can live off that interest. So now you can live to 150 years old because you can live off the interest. Maybe not 150 because inflation. But that's the message, because there's so many people that I see that are crushing it, doing well, but they're paying their taxes, moving on, and then all of a sudden they look back after 5 years and they've put all their monies, bless you, all their monies into their business or into the next deal. And then look, if 2008 happens, and the wrong year at the wrong time, and you don't have this nice little nest egg. So I look at it as kind of even though my money will sit in my IRA for 4 or 5 months and do nothing at our custodian. And I'm okay with that because I'm waiting for the 1 or 2 deals that are flips.
Right.
that are a quick 100% returns or 25, 30% returns. And that's what I feel like people need to be doing a lot more of.
Right. I did not know about the wholesale thing with EMD. That's crazy. Yeah, I mean, like there's guys who, I mean, you can make millions of dollars a year if you're, a pro wholesaler.
You'll have the Peter Thiel issue.
Yeah. So, but okay, so let's just play on that. If I were to go start, which one would I do for this? A 401k to do that?
Mm-hmm.
So if I were to start a 401k and do that, I still have my overhead and operating expenses and marketing budgets and commissions to pay salespeople on those deals.
Mm-hmm.
Could I pay them from that, or how does that work?
Yeah, you can. The only thing you can't do is pay yourself. So you can't pay yourself a commission, can't pay yourself a management fee. But if you have a team, individuals, and they invoice your IRA or
what
the
about
LLC.
marketing budget to get that deal?
Sure,
Okay.
that's an expense. Yeah.
Wow.
Yeah.
So let's just say, I make 20 grand on this deal, and I got 10 grand in cost.
Mm-hmm.
I can go pay it back to. Would I have to pay them directly, or can I pay it to the company, which then pays them? How does that work?
As long as you're not the signer of that company, yes.
Okay, I am the signer of that company.
So you'd pay them, then their company, their LLC or whatever, them individually can bill you.
Got it.
And or your IRA, and I'll, just to clean that up a little bit. There's one extra step that we would do here is when your IRA is doing a lot of transactions, like you said, there's a marketing fee, there's whatever 4 or 5 different expenses that you need to pay. The easier thing to do would have your Roth IRA that's owned by your 401k own a new LLC.
Okay.
100%.
That's what I did
with
the SEP. I remember that.
So same thing. So this Roth would fund this new LLC, and then that LLC would have a bank account.
Just doing deals,
paying different vendors. You just can't pay your business.
Got it. Okay. Yeah. Now I do remember we did that for the mobile home and stuff. It's just like, we got these rehab expenses, we got all these, and then the LLC rectifies at the end of the year.
And the thing that I say, because when we start talking about all these LLCs and 401ks, and we help everyone with that. So, and I also say, let's just test the theory first. Like before you go out and create 2 LLCs and a retirement, let's just get the account, do a flip, do a wholesale deal. And once you see it once, now improve it. Now go out and spend a little bit of money.
Yeah. No, and by the way, guys, we were going to link to it at the end, but if to Greg's point, if you are interested in having Greg's company do it for you, we're linking to their company down below in the description, so you guys can book a call with them, and they'll take care of everything like he's talking about. You don't need to just be like, all right, I need a 401k because Ryan and Greg said it on the podcast, and they're telling me I also need an LLC. Like, no, they'll just book the call and they'll tell you what you need. Because there's like we're saying, there's like a bunch of tools, and they're all different.
There's tons.
Depending on your situation.
Yeah.
So with self-directed, because that's the big thing here, right? Explain how that works.
All right. So first of all, what's interesting, I don't know if you heard this recently, Ryan, but Fidelity and Charles Schwab, all these major brokerages are coming out saying they have a self-directed account. And it's actually great marketing. I can appreciate. It's not, they've just created an account called self-directed, but you actually can't put it anywhere but their options. So it's not truly self-directed. A self-directed account.
It's self-directed within
Fidelity. You can choose one of these 10 options.
Yeah.
But if you were to go to Fidelity right now and say, hey, look, I want to invest in Ryan's fund, and you go to Fidelity and say, I want to move my $50,000 or all whatever into the fund, they would say you can't do that. So it's not truly self-directed. A self-directed, which is what we are, we're a custodian. We've been licensed for 12 years, and it's been around since the 70s.
Yep.
We basically are a license by the banking division to allow individuals to make decisions where their money goes.
Right.
And we are not a fiduciary. We don't make any decisions. So when your money comes over to us, we don't say, okay, now here's your, are you moderate or aggressive growth? We'll put you in the stock market, or here's Pineda Capital, or here's these different investments. We don't share investments. We don't want the liability. We also don't want that. That's not what we do for a living. Our job is to make sure that your account is set up correctly, we have the right account set up for you, and that we also report to the IRS all contributions and distributions.
Right.
That's our job. And so it is your job, and which is why most of Americans don't do it, is they aren't actively listen to these kind of podcasts. People that are listening to this are those that are typically taking control of their retirement funds. 90% of America shouldn't be doing what we're talking about.
Yeah.
Because they should just put their money with somebody else, do whatever they say, watch it go up and down, and I say buy the stock, HAP. Hope and pray. Just hope and pray that when you retire, it's a good year. And so this is not for everyone. This is for those that want to take an engagement and understand where they're investing. But so self-directing, and again, sorry, it's a long answer, is truly just that. A self-directed IRA doesn't mean it's just an IRA. Self-directed could be a Roth. Self-directed could be a 401k, a simple, a SEP. So our company holds those accounts. We have over $1 billion, thousands of accounts that work with us, hundreds every month that open up with us. And so we're really good at teaching people how to move a portion of or all of their funds to a self-directed thing. And one thing I want to add real quick to that, Ryan, is I think people don't realize is over half of America in the last 5 years have changed jobs. So most people have an old 401k from a previous employer that they didn't know that they can actually self-direct and invest in your fund.
Yeah.
And so, or in real estate or wholesale.
Yep.
And why don't you know that? Because stock brokers they don't want you to move the money. They want it to stay there. And there's literally trillions of dollars sitting in, I can't tell you how many times I'm at an event and I ask, who here has a 401k, an old 401k? 30% of the room goes up. And I say, who here knows where it's at and how it's doing? like at least half the room it goes down. And so it is such a huge asset out there that people don't, most people are listening to this have an old 401k that it might even have like $5,000 or $10,000. That's fine. You can roll it over. There's no penalties, no taxes. Roll it over into a self-directed IRA and start investing it. Put it in a fund. And so I see it obviously all the time because I'm invited to places where people are taking action. But in general, most of America is not doing it.
Yeah, guys, I think that's a good point. And we have actually done a bad job at this at Pineda Capital. I mean, we've raised millions and millions of dollars to go buy commercial real estate, and we're going to continue to do that for many, many, many years. Mm-hmm. But the self-directed IRA is not something we've really honed in on, nor have we been made, potential investors aware of. And so for those of you listening who've thought about investing in my fund or, doing deals with us, definitely this is an option. And so we're going to start integrating this into, our investor relations and everything else. So for those of you interested in Pineda Capital and wanting to invest in commercial real estate with me, you can go to pinedacapital.com and we can link you with Greg's team and everything else. WealthCon is coming to Hollywood. If you've ever been to any of my events, you know they're life-changing. We get the best speakers, we have the best venues, we have the best parties, after parties, and networking that you could imagine. I've met so many people who ended up becoming business partners of mine at my events. I've made great relationships, and the people who have attended have done the same. And so I want to see you at my next one in Hollywood, California, April 4th to the 6th. It's going to be absolutely incredible. We've got speakers like Chris Crone, Lewis House, Tatiana Landano. We've got Vanessa Lau. We got Robuilt from Bigger Pockets. The list goes on and on. We have a huge lineup of speakers, and I want you to be there. So if you want to attend the event and learn more, go to wealthcon.org. Once again, you can go to wealthcon.org and go learn more about the event and register today. Hey, if you're looking to grow your real estate investing business, whether you're just getting started trying to get your first deal or you're trying to scale and get to the next level, you need to join us at Wealthy Investor. We've got events every single quarter that are absolutely crazy. We've got online coaching programs where we have Zoom calls, a community every single week. We give you everything you need to know to start your business, scripts, processes, SOPs, all of it. It's for you so that you can dominate. So if you want to learn more about how to join our community and be mentored by me and some of our top coaches and be around other students who are absolutely crushing it, go to wealthyinvestor.com, apply for a free call with my team. Once again, wealthyinvestor.com, apply for a call today. So self-directed gives you the ability to do this, right? And basically make your own investments, whether that be the stock market, whether that be real estate,
businesses, gold, precious metals.
So I was going to actually ask that because my new thing is we're going to be buying businesses this year. And, I've been saying this on social media, and we're raising money through my NFT community called Tykes. And so basically these people who bought a Tykes Unleashed, okay, that's the name of the collection, we're going to put them through a process to become a sophisticated investor. And so, we're going to do 506B funds and everything else. And what you're saying is people can use their 401ks to invest in those deals?
They can invest in funds. The caveat to that is NFTs still are not approved for retirement accounts.
No, I'm not saying to buy the NFT.
But the business itself, the 506 that you're creating, absolutely.
Okay. Yeah, because they have to buy the NFT first. That gets them into the group.
Got it.
Then the group, we are going to build relationships, educate, get them to that sophisticated investor status, and then from there, present them different deals.
100%.
Okay.
100%. And the other stat that I didn't share with you, I just talked about 401ks, but IRAs, there's over 85 million IRAs in the United States. I mean, there's 300 million people here. And that represents over $4.8 trillion that are sitting in retirement accounts, and only 3.5% of Americans self-direct.
Wow.
So the opportunity, and that's why I think I have this new my passion the last 10 years has been this, most people just don't realize it. And so as you're raising money for funds, or as you are an employer or employee that have this money and you're just sick of the stock market, I'd rather lose money, if I'm going to lose money, making decisions I've made. Not because, Elon Musk wakes up and says something stupid and then all of a sudden that stock's down 25%.
Right.
And so for me, I love investing what I understand, and so do most of my investors. And so I did want to mention that in the IRA. So there's just so much money there, and people are just sitting on it, and they're doing what my mom used to do. She doesn't do it anymore, but my mom, all she would do growing up, I think most people probably do this still, is they get the statement in the mail or via email, and what do? They look if it went up or down, and they get rid of it. Right. They don't know. That's it. Did it go up or down? Most people now even skip that step. They get the envelope and they just file it away, or they delete it. They don't even look if it went up or down because they can't touch it.
Right.
It's a nest egg people should be taking advantage of.
What does it cost people to start a self-directed?
Self-directed, it's not very much. It's typically less than 1%. So our fee's less than 1%. It's anywhere from 25 basis points all the way up to 1%. Our average fee is about 50 to 60 basis points, which when I say basis points is 0.5%.
Yeah, so if they have $100,000 in the account, your guys are charging $500
to $600 a year. Yep.
So you're just in the volume business of making money.
That's it. So they pay it every year. The difference between us and I think all of our competitors is we don't have miscellaneous fees. I mean, there's some tax, like if you need like a 5498, some tax forms filed by us, we charge. But if you told us to wire out money from your account every day, we don't charge any wire fees. We don't charge any transactional fees. And all of our competitors, they'll typically have a little bit lower annual fee, but you're getting nickel and dime, and there's no fees. We have our annual fee, but then everything's included. And the biggest thing that I like to harp on why I started the company is we're fast. There is no one faster than us, and I know it. I know the industry, and most clients, if they were to go and set up with another custodian and move their money from somewhere else over to them, it takes anywhere from 4 to 8 weeks. We're 2 weeks.
So our friend has a crypto IRA fund, or not a fund, but a crypto IRA company. Mm-hmm. So you said they can't do NFTs, but they could buy crypto.
They can. We can hold that as well. So yeah, I think our mutual friend. Yeah. So we got lots of clients that buy crypto using their self-directed account with us, and you can do all the above. You can move over $50,000, $100,000 and put some in crypto, some in real estate, some in the fund.
What about? So you said businesses. Could they buy just a business straight up, or it has to be like a fund?
No, they can buy a business straight up.
Wow. So they can go buy that laundromat.
Yep.
With a self-directed IRA.
Yep.
That's crazy. So what can't you do? Just pay yourself?
NFTs.
NFTs, okay.
Arts and collectibles.
Okay.
You can't pay yourself. You can't buy your own vacation property. You can buy Airbnbs.
You can't buy your own personal house, I assume.
You can't. Or a personal car.
Wait, you can buy a car with IRA money?
If you're not using it for yourself.
So
or your family.
I could buy a Turo car.
Yeah.
Because that's an investment.
Yeah. If you're
That's
not using
crazy.
it, if you're buying an asset that intends to be profitable, unless it's an art or collectible, you can do that. I mean, I've had people buy a cattle farm with
What?
their IRA. Yeah, I mean, I always say, look, invest in what you know, and so people have bought some of the strangest
Could you do
things.
watches?
Sure, you could do a watch. It's a watch. The way you would do a watch is you'd have to have a company, in my opinion. I haven't seen anyone do it, but you could do it. A company that buys,
I'm gonna do it. All right.
buys the watches and then sells the watches, and that's the profit. Yeah,
Can I at least wear the watch?
I don't think you can wear the watch.
I was gonna say I'm gonna take the 300 plus out once we sell our deal,
No, you
and then
can't
I'll be
do that.
like, all right, we're getting a Richard Milley. We're gonna get this. We're gonna get that. These are my investments.
No, you can't wear the watch. You can't wear the watch.
Can I display the watch on YouTube?
Probably.
Yeah, I'm gonna think of all the gray areas. Of
Yeah,
what you
you're really
can
gonna
do.
push me on this, aren't you? No.
Yeah,
The sky is really. I mean, we've got a great compliance team, and we just help you to make the right decisions when you choose what you're gonna do.
yeah.
So-
No, that makes sense. So for you, I mean, you've been doing self-directed for a while of your own funds. You said now you're doing bigger real estate deals. You look for a couple a year that, you can just go use your own capital. I assume you're probably just using your self-directed.
Some self-directed, some not, because I still like the cash. I still like to play. I play as hard as I work, and so I do some in and some out. But then I also have about six to eight friends that, when I'm like, hey, let's do this deal, and we kind of put our money together, and we did but I do. It's nothing like, for me, sexy is the numbers, and speed. And so I like to get in and out of deals. And so we're doing a couple industrial pieces here in town, some land deals, probably going to do a small deal in Park City, but just small little industrial stuff or land plays is what we've been doing.
What do you guys do with the land?
All of the horizontal work. We get it, all the utilities there, permits approved, et cetera. And then we'll either sell to a home developer who wants lots.
Yep.
The land that we're doing here, we're actually building the industrial space. It's 25,000 square foot industrial space. We already have the tenant that's signed the lease for it. It's a well-known tenant. So, but for me, probably maybe it's similar to you. I'm not sure, but I've been doing it long enough that I see a deal every day.
Yeah.
So we pick and choose. So I'm not out there actively looking for them. There's some different deals that come up. I recently invested in a game with a fellow YPO, to startup. It's already worth $300 million. They got evaluated. It hasn't even launched yet. It's supposed to launch it. I did that last year inside my IRA. Excited about that. But a game. It's a video game that we invested in. So that's not my norm. That was totally outside of my norm. But I got excited about it. But I would say for me, bread and butter is real estate. It always has been, probably always will be.
Yeah. That's crazy, man.
Yeah.
Is there anything else people just don't really know about the retirement game and IRAs and everything? Seems pretty simple.
It is pretty simple. People just don't do it. I think the biggest.
Well, let me add this.
Yeah.
The thing that people don't know, especially because mainly entrepreneurs listen to the show, myself included, is that you don't need like some other person, employer, to go start this. Like they can call you right now and get one started.
Yeah, it's easy. I would say one thing that I reflect on that I share with others, because usually when I go and speak and talk to people, half the room have a retirement account and the other half don't. Mm-hmm. So the other half are like maybe how I was when I was first starting. Mm-hmm. So that half is typically looking for money.
Right.
So if you're listening to this and you're like, okay, this sounds cool, but I can't put away $50,000. I need someone to fund my business.
Yeah.
Or fund my deal. We've just shared with you a way to go find money. There's 85 million IRAs in the United States. There's 85 million lenders that could lend you a portion of their IRA to fund your business to get you going. And I think that's something people forget, I think, often. And then the last thing is that, we've already touched on it, but people just have to go do it. And I think because so many young people are investing and making money, they think that because they can't take it out till they're 59 and a half, that it's not value to them. I remember.
This is part of my problem.
Yeah. I remember, this was like 8 years ago, I was talking about this. I was supposed to go on a stage and talk, and I was outside right beforehand, right? I was just listening to people. There's this young group, I don't know, in their young 20s. not much older. I mean, I was 10 years older than them. They said, oh, who's going on next? I'm listening to them. They're like, oh, there's this IRA guy, right? And I'm like, okay, what are they going to say? The girl's like, hey, how about we just go get drinks during this session? So they go, they leave, they go do drinks. And I actually started my presentation telling that story. And I was like, how wrong were they? Because when I was 23, that's how I started my business, someone's IRA.
Yeah.
And so why people are wrong about that is you and I just talked about what you can do with your money. So you can buy a watch company, you can buy cattle, you can buy real estate. So can you not pay for a vacation? Sure, you can't. But can you do almost anything else with it? Yes. So it's totally flexible. So don't make that a reason, and don't say you're going to do it in a few years from now. Because in a few years, you turned your 50 into 100 in 1 year or less. And so it just takes one deal.
Right. Yeah, I'm just thinking like, what if you had whole businesses under that umbrella of like, what if one of my companies was purely just the IRA company and it's never taxed?
Well, in the last few years, that's what I've done.
Yeah.
There's been a couple of business opportunities where you already have enough income.
Yep.
And so, and they're passive ones, someone else that's managing them.
Yep.
You absolutely should be doing that. You especially, because I know you've got a lot going on.
Yeah.
When it's more passive for you and you're just putting a little bit of money in, do it with your Roth, and 100% of the profits and the sale are tax free.
Yeah. I should think about doing that with a couple of my businesses because, yeah, they're very, very passive and. Yeah, I guess it has to be a passive income business, right?
It does. It can't be actively in it. And it also can't be one that, like, let's say you already have a wholesale business currently.
Right.
You can't now have your IRA own that wholesale business. It has to be something new.
Okay.
Now, but it could be a new wholesale deal. It could be a fresh deal contract. You can put that in your IRA. Mm-hmm. But you can't say, oh, I already have a wholesale deal. It's under contract. I want to now move it from my name to my IRA.
Well, so like, we're going to be buying businesses now. Some I'll be active in, some I won't. And we're doing that through a company called Pineda Ventures. And I'm just thinking now, I didn't consider that of like, okay, well, I might as well put my ownership in an IRA. Does there have to be like material investment? Because some of these I'm going to get for free.
Yeah, there needs to be material investment.
Okay.
But you can make it.
It could be $1,000.
You can make it. So what you just said, and obviously I talked to our legal about this as well as my disclosure on it, right? But the Pineda Investments have Pineda Investments 1 and Pineda Investments 2.
Yeah.
And the one's owned by your Roth and the one's owned by you. So then anytime there's something passive, you have that one own it through your Roth, and the one that's not, the other entity. So you can just pick and choose which ones are truly passive.
Right.
Yeah.
Right. That makes complete sense. But I think on the real estate side, though, if you buy with your Roth, can you still get depreciation? Or no. That's what I thought. Okay.
No.
So that's the only kind of like downfall.
Mm-hmm. Yeah, you get to pick and choose which ones makes the most sense.
Right. So it's like, hey, I need the depreciation with this. I need the cash from this. Active.
If it's a quick flip, it's a wholesale, you could do it in the Roth.
Yeah.
Yeah. Or if it's even a loan or you're lending it and you're not getting depreciation.
Just lend it just to make the interest and tax
10 or
free.
15 or whatever the percentage is. Yeah.
Yeah.
That's right.
No, that's great, man.
Yeah.
Well, bro, I'm excited. I'm actually going to reevaluate a lot of what I'm going to do this year personally. I didn't actually come in here expecting that I was going to be blown away because I've been involved in IRAs for a long time, but I never considered that, man, I could do this with a wholesale. I could do this with a business.
Mm-hmm.
If I don't really need that money, it can all be tax free if I just so choose.
Yep.
So I really like that, dude.
Cool.
But yeah, guys, if you're interested in help, Greg's company can definitely do it. We'll link to them down below to book a call with his team. Greg, appreciate you, bro. Looking forward to continuing to do things together, man. It was great.
Thanks for having me, man. It was great.
All right, guys. We'll see you later. Peace. Hey, I hope you enjoyed that podcast. Thanks for making it to the end. The good news is I've got another one that I know you're going to like, and all you got to do is click it right here. Linking it right here. All you got to do is just click it, and you're going to see this new episode that you're going to love.